Are you trapped in the throes of a mortgage prison, struggling to refinance your home loan? We'll discover how Westpac is revolutionizing the financial stress test protocols and providing a lifeline for homeowners and changing the game completely. In a strategic effort, Westpac has decided to ease the financial stress protocols for homeowners seeking to refinance their loans, aiming to alleviate the shackles of the so-called mortgage prison. When the pandemic hit, an enormous number of Australians, close to 900,000, obtained mortgages at record low fixed interest rates, as low as 1.89, 1.99 in a lot of cases. However, these fixed terms are now coming up for expiry, and these borrowers are set to be confronted with a considerable escalation in their interest rate levels and increase on their repayments. This dilemma has compounded further as individuals who hope to refinance their loans to alternative lenders with lower interest rates find themselves trapped by their current circumstances. They are unable to qualify for the standard financial stress test that the banks are now applying. Typically, this stress test evaluates borrowers' financial position, ensuring their ability to continue repayments even if interest rates surge by a further 3% on current interest rates. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. However, Westpac is poised to introduce a revised policy starting this week. Those seeking to refinance their mortgages don't need to meet the standard serviceability requirements test and will be evaluated on a modified servicing assessment rate. Now, the eligibility criteria for this modified assessment demands a credit score exceeding 650 plus, and you must demonstrate timely repayments on your mortgage over the last 12 months. Currently, banks add 3% on top of current interest rates as a buffer, essentially to ensure new borrowers can meet their repayments both now and in the future. So if you're looking to refinance a loan now, the bank would effectively take the rate that they're offering, say 5.5%, add 3%, and assess you on your ability to meet a mortgage repayment if it hit 8.5%. However, this assessment is also incarcerating some existing borrowers into a mortgage prison. Let's say you got a loan 2 years ago. The assessment rate the banks were using back then was only 5.25% instead of the 8.5% we see today, which means if your circumstances haven't changed over those 2 years, the simple change in that assessment rate from 5.25% to today's assessment rate of 8.5 sees your borrowing ability reduced by 30%. If you haven't had a substantial increase in your income over those 2 years, a lot of borrowers are finding themselves in a position where they can't actually refinance their mortgage because they fail the bank's current assessments even for their loans that they currently have. This means many borrowers who acquired loans at record low fixed rates when APRA was just stress testing them at that 5.25% and now potentially in the most need of rate relief. Even though implementing different stress tests for new and existing borrowers might introduce some complexity, the possibility of aiding those entrapped into mortgage prisons to refinance might prevent potential loan defaults. As per data provided by the Reserve Bank of Australia in April, it anticipated that around 880,000 Australians who had fixed in their mortgage during the record low interest rates would now face enormous increases in interest rate repayments and loan repayments throughout this year. And this is where, in the realm of home loans, your loyalty won't get you much reward. And there's a stark reality facing many Australians who are finding their fixed rates coming up this year, and that is exploring alternative options and seeking a better deal. The average mortgage holder could save up to $2,000 per year, amounting to a staggering $100,000 over the duration of their loan. Refinancing or renegotiating your mortgage are two strategies to help ensure you can secure the best deal possible and prevent overpaying for your mortgage. And many are falling victim to the so-called loyalty tax. It appears that new borrowers are constantly enjoying a lower rate than those sticking with their existing lender, and this disparity has been termed loyalty tax. Now, by refinancing, you'll have an opportunity to reduce that cost on your mortgage and prevent paying a loyalty tax unnecessarily to your lender. And in a lot of cases, the banks are giving refinance rebates to move your mortgage across. And whilst there can be a cost to refinance your mortgage, estimated costs around about $700 to $1,000, give or take, depending on the lender, depending on what you're doing, the refinance rebates are effectively a cash that the banks give you. Some lenders give up to $3,000 or $4,000 just to move to them. So whilst you do have maybe $1,000 to move, you're not going to be out of pocket because that $4,000 cash that you get given covers all your costs and then some. And that's cash that you get in your pocket. You can literally use that cash for anything you like. If you want to do small renos, go on a small holiday, or put that towards paying back down your loan, that cash incentive is yours. It's effectively cash put in your bank account. Now, typically, there can be a number of reasons why you might want to refinance your loan. I've got 9 reasons. I'd love to know in the comments section below if you'd like me to explore any of these options a bit more detail. I'll run through them at a high level today. And if you did want me to look at it in more details, I can certainly help. Now, if you are in any of these categories, it's certainly something we can help. Here at Hunter Galloway, we're mortgage brokers. There's no cost for our service. We deal with people Australia-wide. So if you are looking for assistance, reach out with us at huntergalloway.com.au, fill in a contact form. We'd be happy to help, or call us directly on 1300 088 065. And here are the 9 reasons why you might look to refinance. The first is to reduce your home loan repayments. Now, this can be done by either extending the loan term out, as well as the fact that you're going to be going on a lower interest rate, which will invariably reduce the ongoing monthly repayment. The second might be because your home loan value has increased and you want to use that equity for something. The third is because your fixed rate mortgage is expiring and you want to look at getting a lower rate. The fourth might be because you want to pay off the loan fast and you want to restructure to get yourself in a better position. The fifth reason is you want to increase your loan to take out some cash. The sixth might be you wanting to do some renovations. The seventh is you want to consolidate some debt, such as credit cards and personal loans. The eighth is removing a guarantor. And the ninth is you want to pull out some equity to purchase another property. Now, leave a comment below if you would like me to explore any of these 9 reasons that you might look to refinance in further detail. We'd be more than happy to do a video on it. Let me know down below. Now, the trend for lenders banking on customers being unaware of potential savings is quite common. By refinancing to a lower rate, you have the potential to save up to 0.5% on the interest that you're currently paying. Over the typical life loan of a 30-year mortgage, this can accumulate to over $100,000. And it's remarkable how much interest can be saved by simply renegotiating with your lender or refinancing your mortgage. Lenders often keep existing customers at a slightly higher rate whilst offering new customers a more attractive deal. And this is where, if you're keen to get a better deal on your loan, refinancing might be the right route for you. Despite the perceived inconvenience, the potential savings benefits are significant. Stats show that home loan refinancing has nearly doubled from 2 years ago. As many as 77% of mortgage holders might be overpaying on their mortgage due to lack of exploring alternative options. Last year, 15% of mortgage holders were successful in switching their lender to secure a lower rate, whilst a mere 8% who attempted to refinance were unable to find a better deal. So it's imperative that borrowers act proactively rather than waiting until they're struggling to pay their bills to seek a lower rate on their loan. And remember, like, share, and subscribe to stay informed with all things property and finance. Westpac's decision to ease financial stress test protocols for homeowners seeking to refinance their loans is a strategic move aimed at alleviating the burden of mortgage prison faced by many borrowers. With the introduction of modified serviceability assessments and options to refinance your mortgage, borrowers out there who feel trapped with high interest rates might actually find relief and potential savings. Here at Hunter Galloway, we're mortgage brokers. Get in touch with us if you'd like assistance with any refinancing needs. We deal with people Australia-wide. Call us on 1300 088 065 or visit our website huntergalloway.com.au. As always, guys, thanks for watching and we'll see you next time.